joined by Jeremy Allaire, CEO of Circle. Jeremy, thank you so much for joining us today.
Thank you, Tina.
No, it's great to have you. It's been an incredibly exciting start to the year, and the last 12 months in general for the industry, I think we probably both agree. We've seen some significant growth across most metrics, including stablecoin adoption. And you've overseen the growth of the USDC stablecoin from a market cap of about $500 million this time last year to 4.8 billion today. So congratulations.
Thank you. Yeah, it's been a lot of growth.
It's awesome. So we've got a ton of stuff to talk about. From the recent positive announcement from the USOCC on one hand, and the less positive US Treasury consultation announcement before Christmas. So before we get into all of that, let's maybe talk a little bit about the developments with USDC specifically. So for our viewers who might not be familiar with all of the participants within USDC and the distinctions between them, can you give us a sense of Circle, USDC, and Center, and how each of those entities plays a role and what their responsibilities are within the USDC environment?
Yeah, absolutely. So just very quick history. We began work on what became USDC back in 2017. And we really envisioned that there could be a kind of protocol layer for fiat digital currency. In 2018, and actually late 2017, we formed something called Center, which was really nothing at the time except a place to house intellectual property around what we were building, because we were very committed to this idea that you could build essentially an open standard that an ecosystem could be built around and that there could ultimately be governance around. And then in 2018, Coinbase joined us to launch Center Consortium specifically, and joined us as an issuer of USDC. So in late 2018, fall of 2018, we launched, and Coinbase launched as an issuer alongside us, and it's grown significantly. So Center Consortium itself, just to kind of clarify, governs a lot of things. It governs all the open source intellectual property. It governs the policies around how reserves works. It governs the compliance, information security, and operational procedures that issuers must perform, including various regulatory and licensure requirements. It governs, what blockchains USDC gets deployed on, the substance in the consortium has grown and grown, and very recently. Center appointed CEO David Puth, who's a pretty major player out of the financial system.
Big hire. What was behind that choice?
Yeah, so I think USDC as the first stablecoin to be developed out of Center Consortium is certainly not going to be the last, and furthermore, and it really relates to even some of the presidential working group and the OCC guidance, we really see these global stablecoin arrangements as, which are really consortiums of private sector actors, as being, critical market infrastructure for the future of the international monetary system and the future of how finance works. And, David, previous to coming on as Center CEO, is the CEO of CLS International Bank, which is the biggest bank in the world that no one knows. They're an enormous institution that it's a consortium of 70 of the most critical financial institutions of the world. And it is what is designated kind of a designated systemically important market utility. And it provides the clearing and settlement infrastructure for most of the global foreign exchange market. So currencies that are liquid and crossing each other. It's $2 trillion a day of transactions, and it's supervised by 23 of the most significant central banks in the world. Mm-hmm. And so David really has a passion for the future of currency, the future of how it will work in the monetary system, and really shares the vision that all of us had around building that on public blockchains, building that on open internet infrastructure, building it around stablecoins specifically. And so he's building Center independently. There will be many other companies that join as members. There'll be new issuers of new currencies. So that's sort of on its own track. Circle itself is the kind of minting issuer of USDC. We provide like fundamental market infrastructure that lots and lots of firms around the world can integrate to and build on top of, and that's grown a lot. So many of the most important firms in the crypto asset markets depend on our services for managing that kind of fiat infrastructure and so on.
Yeah, so apart from the massive increase in adoption overall, you've been actively developing the USDC product and released an API this last year. So can you tell us a little bit more about that and some of the other developments that you have in the pipeline?
Yeah, absolutely. So I think just to kind of break things down, sort of USDC is this governed standard, and really you can think of it as a protocol and a set of open source technology. Circle itself is what I like to think of as kind of a payments and transaction bank. So we're not technically a bank right now, but we provide a set of capabilities that businesses and other financial institutions and fintechs can build on. So that's essentially, a transaction banking core that includes, the ability to kind of custody and store and build custom applications on what we think of as kind of digital dollar account infrastructure. And then around that, there's basically a wide range of rails that we offer through API services. So, basically the ability to move value using traditional bank transfer methods, wires, domestic bank transfers, card networks, but also to move seamlessly on multiple blockchains with USDC. And you can move seamlessly between them. So a company could take a credit card payment and it would settle as USDC in an account that they could then use themselves or present to end users. And so it's sort of the seamless movement between digital currency native treasury infrastructure and sort of both the public blockchain ecosystem and the legacy financial system. So that's like a set of API services that people can pay a subscription fee to access and usage fees just based on what they're using. So that's something that we launched last year. It's growing very fast. And
how widely has that been adopted by your key users so far?
Yeah, we've seen a pretty significant ramp, hundreds and hundreds of companies that are starting to adopt these services. And, we serve a number of different segments. So we serve kind of institutional, think of it as institutional trading firms, electronic markets firms, brokerages, OTC firms, family offices, like that kind of thing. But we also serve blockchain startups, crypto finance firms, traditional fintechs, companies building remittance products, companies building savings products, lending products, and then commerce firms. So more and more, we're seeing companies who want to utilize this as an infrastructure for settlements in commerce flows. So they're not like crypto firms, or they're not fintechs or banks. They're actually commerce firms. And then finally, increasingly, more and more, both mainstream kind of consumer-facing fintech firms and banks are getting in the game.
That's awesome. I know you also have a partnership with Visa and the Venezuelan Aid Delivery Project, which you supported with Plaid and an open banking platform integration. So that's kind of a use case that you haven't discussed. What's that partnership look like, and what other use cases do you see evolving beyond the current ones that are being adopted today?
Yeah, so just to kind of break that down, we worked with the Bolivarian Republic of Venezuela to utilize USDC as a way to bypass some of the controls that the Maduro regime puts on individuals and entities there. to deliver digital dollars into the hands of frontline healthcare workers that are fighting COVID and aren't getting support from their own government. That was highly successful. That had support from the U.S. government, and it was a really, really powerful use case, and sort of demonstrates that even kind of foreign policy objectives can be met using stablecoins. Because they are a profound way to move value over the top of the internet instead of through the legacy banking system. So we have actually multiple governments now that hold accounts with us and are beginning to use USDC. We have one government that's a dollarized economy that is accepting tax payments in USDC. So lots of different things. The Visa partnership is really, really exciting. We announced that in early December. We're in the beginning phases of rolling out parts of that partnership. It spans a number of things. It spans, a kind of joint go-to-market relationship to really get fintechs, banks, and commerce marketplaces in the Visa ecosystem to adopt USDC and Circle APIs. Mm-hmm. And then we're working on a solution around what are called kind of Visa partner wallets. Visa is very progressive in basically creating a way for crypto wallets around the world to issue Visa credentials, to issue cards and tokenized credentials. And the use case here is businesses being able to make payouts to individuals and entities around the world, where the payouts are made in USDC. They get settled over the internet really fast, very inexpensively, and create a seamless experience for businesses to connect to their customers, suppliers, users, and deliver payments to them at the speed of the internet. And then when they receive that payment, they have USDC in their crypto wallet, and they can spend it immediately at any of the 60 million merchants that accept Visa payments. And so it's sort of connecting their traditional payments acceptance system with USDC as sort of a business to business and a business to consumer payout model. And so that's something we're working on and very excited about. And we also announced that we're going to be introducing a card program ourselves, enabling businesses that want to utilize USDC in their own kind of treasury and cash management infrastructure to also utilize that, not just for on-chain transactions, but also for card payments as well. So a lot of different pieces there.
That's amazing and really, really exciting. So, you and I have worked on a number of regulatory, projects over the years and talking with policymakers. And we know that one of the questions that we get asked a lot is, what are the use cases for crypto? How are people actually using it for good? Isn't this just a speculatory market? And, you've just rattled off 3 use cases that have been developed in the last year that are materially impactful. And, taking the tokenization promise into, a number of different areas, whether it's payments or whether it is, government aid. I think this is really powerful stuff. I know we're going to talk a little bit about regulation in a minute, but
on the use case thing, I know you were asking other use cases. I mean, we're seeing just this a rapid proliferation in use cases, and I think this is one of those things where, it's sort of like in different phases of the internet when people figured out you could have a Facebook brand page, or a company could have a Twitter handle, or even just like, oh, what do you do with a website? What can you do with that? I think we're finding, not just individuals, but businesses and financial institutions all across the board sort of discovering digital currency. Mm-hmm. And discovering like, oh, wow, this works like the rest of the internet. It has all of these incredible attributes. This opens up new possibilities. What can I do with this? And so when I get asked, like, what are the use cases for USDC? My answer is, what are the use cases for dollars? Mm-hmm. And basically every use case in the world that you have for dollars is a use case for USDC. And so we're at the beginning phases of that very, very broad use. And so it's going to be a capital markets infrastructure. It's going to be a retail and business to business payments infrastructure. It's going to be a treasury management infrastructure. It's going to span all of this. And just like, it's sort of like saying, what are the use cases for email?
Yeah.
or what are the use cases for the web? These are going to be very general, widely available technologies.
So let's talk a little bit about scaling. You originally built on Ethereum, which is urgently trying to tackle, its well-advertised scaling issues, high fees. How is that, those fees being able to impact transactions? But you're now supporting other networks, including Algorand, Stellar, and Solana, I believe. Why did you choose these networks? And are you confident or less confident about, Ethereum going down the right path? How is what's your view on the scalability options?
Yeah, I mean, we look at public chain infrastructure through the lens not just of how do you solve scalability, but as a technologist, when I look at what I would call third generation blockchains, you're looking at essentially like new operating system infrastructure for the internet, and there is an immense amount of technical innovation, competition in building that kind of compute and transaction processing infrastructure. And it's not clear, that it's a winner takes all space. And in fact, I think there will be a great deal of very successful layer one public chains. And we're seeing the emergence of public chains that are optimized for things like DeFi, or optimized for cross-border payments, or optimized for use in digital securities applications. We're seeing blockchains that have a very specific regional focus. We're seeing blockchains that are designed for embedded devices, blockchains that are built for use cases like NFTs and gaming. And so there's an enormous amount of innovation there. And when we think about standard stablecoins like USDC, we think of it as a protocol. So, if you think about, HTTP, the protocol of the web, it's not like tied to Mac or tied to Windows. It's a cross platform. And similarly, if you think about your digital content, your photos or your music, everyone wants, their digital content to work everywhere, to be cross-platform. And I think digital money is the same thing. We want, if you have digital dollars, they should work on every platform. And so we started a program in the spring of 2020 for multi-chain USDC. And, we certainly focused on blockchains that initially that had, scalability capabilities, that had very strong use cases that were demanding of and needing something like USDC. And as noted, we've rolled out a number of those, and we'll continue to see more rolled out. Center itself is partnering with a wide variety of players in the blockchain ecosystem, and that will just be a consistent theme. If you are a public chain, you want to have the standard for dollars, and so we'll continue to see that proliferate. With respect to Ethereum itself, I remain extremely bullish about Ethereum. I believe it has an unparalleled technical and developer community. The infrastructure that's built up around it is really tremendous. And, I think we'll see over the next couple of years, probably a small number of layer twos that are utilized within, specific categories, including DeFi and payments. And of course, we're working to support those. And, I'm excited about Ethereum too. I mean, ultimately. So, but we have to be patient. I think it's like a major platform operating system upgrade that touches the whole internet, and it touches billions and billions, or probably at some point soon, hundreds of billions of dollars of value. You have to do that very carefully.
Yeah, agree. Well, speaking of being patient, we've been talking about, the institutions are coming for a few years now, and we're starting to actually see some institutional adoption growth happening. You recently launched an institutional trading program. Can you tell us a little bit more about that?
Yeah, absolutely. So, in many ways, the original the sort of birth of USDC was sort of as a dollar market infrastructure for the digital asset trading markets. That was the sort of what I call the bootstrap use case. And so over the course of 2019, it got very well established as a trusted, reliable, and liquid and redeemable, digital fiat digital currency. In 2020, as essentially the crypto asset markets have blossomed, there's just been an incredible amount of interest from institutional firms that want to get involved, and we wanted to create a program that's sort of tailored to those firms that would give them best-in-class access to our infrastructure, to our APIs, to kind of automate everything that they would need to do with stablecoins. And effectively, it's a way for these companies to get white glove support and service, get extremely attractive economics in terms of using the infrastructure, and that's grown a lot. So that program has been very successful, has grown a lot, and we're scaling it out, even more this year to support the continued growing role that USDC plays in the institutional adoption of crypto.
Interesting. So looking also at the institutional space around stablecoins specifically, we've seen some commercial banks develop their own tokens. Central banks are looking at CBDCs. So essentially, not necessarily a stablecoin, but something similar. What's your engagement been with the governments and corporates looking to develop their own tokens, and how do stablecoins like USDC sit comfortably or amongst the peer set if CBDCs start to come to market?
Yeah, we haven't seen anything at all on the CBDC front. Other than some academics and researchers. So there's not really much going on there, at least in relevant Western countries. A lot of speeches, but not a lot going on at this point. I think we've been really outspoken about how to build governance models for globally adopted stablecoins. That included extensive work that we did last year with the G20, the Financial Stability Board, through their stablecoin working group that was co-chaired by senior officials from the US government, Singapore government, and BIS, IMF, most major central banks and finance ministries in the G20, and really worked on defining how should governments set policy and supervise global stablecoin arrangements. And that's a specific concept that the FSB has adopted. And it really speaks to the idea that there are consortiums that are effectively administering stablecoin arrangements. Center Consortium is certainly the only one that's actually out there operating and starting to achieve global significance. There are proposed dollar stablecoin arrangements like Diem that have not yet launched, but I think fit clearly into that regulatory classification. And I think what they put forward is a model for how governments are going to look after this. And that led to the White House Presidential Working Group on Stablecoin Policy. They issued their recommendations at the end of last year, very much in line with the way Center and USDC operates. And then obviously the extensive, very specific regulatory guidance from the US Treasury OCC that lays out how banks can get involved in this as reserve banks for the actual dollars that back stablecoins in regulated contexts, as actual active market participants holding USDC or similar on their balance sheet, being able to utilize public chains as a payment and settlement infrastructure on par with ACH or wire networks or card networks. And so that high level G20 framework translated into a US specific view and then into very concrete guidance so that the mainstream financial sector can get involved. Yeah. So our view is that what we're going to see over the next 2 to 3 years is rapid growth in these global stablecoin arrangements, not just in US dollar, but in many markets, emerging markets and other major developed markets, with private sector actors, banks, fintechs, crypto firms issuing stablecoins in a consortium model on a set of common standards. And I think that's really the model that's going to take hold and achieve scale with billions of end users in the next few years.
Well, we heard Lagarde this week, again, moving into the regulation space, um, talk about the, digital euro and how that is on the cards, but will probably take 5 years.
Yeah.
And then in the same event, went on to say that, we have to do more around KYC and AML. With Bitcoin, because there's been some funny business.
Mm-hmm.
And so, it's a little bit from a deviation of what, her stance has been previously on digital currencies more broadly, right? She's kind of been sitting on the fence. So I thought that was interesting from her. And this comes after the US has also been experiencing a bit of kind of chalk and cheese regulatory policy discussions emerging. So let's talk a little bit about what's happening in the US. So kind of on the less positive side, we had the Treasury consultation looking at non-custodial wallets, KYC being applied to that. And on the more positive note, the OCC announcement that banks will be permitted to use public blockchain networks to settle across. What do you make of these almost kind of diametrically opposed, policy stances?
Yeah, I actually don't think they're diametrically opposed at all. So I think the way I look at this is, stablecoins on public blockchains are, and other cryptocurrencies as well, like individuals that want to transact with Bitcoin or commodity money, digital commodity money, or that want to transact with fiat-backed digital currencies like USDC. All of those are becoming more mainstream. Banks, fintechs, other regulated financial institutions, there's now very clear rules of the road that they can get involved. They can be custodians, they can access and utilize these networks. And I think that's tremendous and extremely positive. There's also been a lot of work, not just from the US, but globally around essentially creating anti-money laundering rules that are very specifically applied to the digital currency ecosystem. This concept of a virtual asset service provider, or VAS, which is set forth through the Financial Action Task Force, which is the body that oversees global anti-money laundering regulation. That's coming into enforcement this year. And the entire industry is, getting set up around that. And I think what it represents is that these are going to be mainstream scale technologies. And there have to be, effectively, models for consistent anti-money laundering protection around them. So this is part of the growing up process for this. Now, I think the specific item that you mentioned, which was this very, very short notice of public rulemaking, had a lot of problems in it. I have been, fiercely opposed to procedurally how that's going about and the substance. And, I'm not alone. I mean, some other major players. And we successfully stopped it. And that was announced yesterday, that this is, going to be a much more extensive review period. And my view is, FinCEN, which is the agency within the U.S. Treasury that's responsible for financial crimes related regulation, I think they're a good partner to the industry. I think that they want to work with the industry to come up with ways to think about addressing the risks that they care about. And it's clear to me that the approach that Secretary Mnuchin pushed forward was not. It was a kind of sledgehammer approach. Isn't going to work. And I think we're going to have a regulator that wants to work with the industry and will ultimately address these issues in a way that preserves privacy, that is supportive of innovation like DeFi, and but obviously is not completely unchecked.
Well, Circle and you specifically, Jeremy, have been one of the leaders at the forefront from the beginning around actively engaging with our government and regulatory stakeholders. And I know that you personally and Circle have, led the charge on a number of different initiatives to better and, really more intentionally engage with policymakers to develop that regulatory climate so that it is intentioned and considered and balanced. So, personally, it's been a pleasure to work with you over the course of a number of initiatives on, really trying to
Absolutely.
educate policymakers for sure. You just mentioned, so, when people say, oh, these, industry initiatives, what good do they do? Well, here's one example of it, that 11,600 and some responses that did cause pause. So, parting words from you as an industry, how important is it that we show up and have those conversations, and how best do we do that?
Yeah, I think it's incredibly important. And, sometimes I think some of the firms in the space, whether it be Circle or Coinbase and many others, some great firms, have shouldered a lot of some of the heavy lifting. But I think this is a point in time where everyone in the industry needs to be engaged. I think that companies should become participants in key industry associations like the Blockchain Association or Digital Chamber and GDF and others. So I think that's critical, and people kind of need to put their money where their mouth is and actually get out there and do more. I mean, the interesting thing is right now we're on the precipice of, in the proverbial technology adoption lifecycle concept of crossing the chasm, and we're really close. And what that's going to mean is that when it's something that touches billions of people and it deals with money and deals with investors, like at the end of the day, stopping bad actors and protecting consumers and protecting market integrity and sort of underlying safety and soundness, those are important things. And the key here is if we want this to touch every person in the world, which inevitably it will, we have to be focused on, I think, an enormous amount of education with policymakers, and then, being open-minded about the fact that there are risks that have to be addressed. One of the things that I've said recently is that the industry needs to stop sort of saying, hey, we need policymakers to, let up or legislate this in a particular way. We need the industry to build solutions. I mean, at the end of the day, this is on the industry. This is, if there's an issue with identity and financial crime risk, industry solve it. And actually the tools in front of us with crypto itself, zero knowledge proofs, public chain infrastructure, all of these open protocols, we can solve it in a way that is far, far superior to the legacy financial system.
Couldn't agree with you.
And so that's, to me, that's really the message to the industry is, let's go solve this problem and solve it in a way which no policymaker ever would even have imagined was possible, and really improve the system in doing so.
100%. I completely agree. Jeremy, it's always a pleasure to chat to you. I'm glad to see you well. Thanks so much.
Thank you. Absolutely.
All right. Take care.
Bye-bye.